All right, hello, and welcome to our third episode of Health Insurance 2.0. It's myself, Cal Burgess, and my business partner, Dimmick Robertson, and what we want to talk about are all the lingering issues with small business health plans and really try to, discuss what's really going on while providing sound solutions to find the right group health plan that you may need. Our bread and butter are, anywhere from small business plans, whether you're a family plan or a subcontractor, all the way up to 25 or 30 different employees. You can check out more or check us out on CustomInsured.com. You can receive a rate quote in under 2 minutes. From there, you can decide if you want to go virtual, if you want to set a phone call or a webinar. We'll be there to answer any questions, but we'll follow your lead as far as what you want to do. But first and foremost, we just want to make sure the pricing is right, and we want to put our best foot forward to show you what our savings is up front and how our deductibles are a lot lower simply because we customize our plans moving forward. So without further ado, what we want to discuss first is how to control costs within a small group health plan. So when we look at a small group health plan, we really want to get an idea of who we're working with. In other words, a family of four that all grew up together on the same health plan is going to be much different than a small business group plan of 10 employees that may have had the same plan for a couple of years prior and they see their rates going up. So we want to make sure that we address each plan based on what their needs are and what their employees want to get out of the plan. This should be a benefit. It should not be a burden for the employees, which a lot of the feedback we're getting is simply that. It's kind of been a burden for the employees. Dimmick, anything you want to add to that?
So the idea here that we're kind of conveying in this, we have the term health insurance 2.0 that we use. A big element of this is the flexibility of the coverage, as Cal kind of just referenced a little bit, but and this is kind of what we'll be talking about as we go further here in the discussion. But it's a unique concept for a lot of businesses. Most people are presented with one-size-fits-all options. They're familiar with the traditional Humana or Blue Cross or whatever the big name companies are. And when people go shopping for those plans, there's really not a whole lot of variance between them. And this may be something, if you're listening, you experienced yourself, but shopping for these plans, you have, you can pretty much pick a deductible and you can pick a HMO or PPO. From there, there's no customization. Let's say you only, your company has 10 employees and maybe only one of them is really someone that's even used their coverage. You can't customize or cater those plans towards that person or that situation. So that's, again, kind of a revolutionary concept in our mind to be able to present this to people, that we basically build the coverage from the ground up. So that's really kind of the idea and the approach that we take.
Exactly. So to take that a step further, we just want to make sure that no one is being overcharged for the coverage that they receive. A perfect example of that is, think of a 14-year-old male dependent. Why would that dependent ever be charged for maternity coverage? Well, the truth is they shouldn't be being charged for maternity coverage, but they are. So a lot of these traditional plans, and when I say traditional, I mean since the conception of Obamacare, these plans have been designed to provide minimum essential benefits. However, it doesn't discriminate from male to female. So you have males being charged for maternity coverage or females who are past their birthing age being charged for that same coverage as well. So in a situation like this, we don't want to offer that maternity coverage. There's usually a much better plan moving forward. We would need to ask a couple of questions about what that 14-year-old needs. Does he have ongoing health concerns? Where does he? How often does he go to the doctor per year? And we can make a recommendation based on what they say. This is this same situation for a 60-year-old male. We're not going to put a 60-year-old male into a plan where a teenage boy may benefit better than he would in, later on in life. At a 60-year-old male, it's likely you may need more office visits per year. There's more preventative issues that you got to take care of as time goes on. So we want to structure the outpatient very differently depending on what phase of life you're in. Square peg into a round hole, excuse me. So we,
And what happens on those, a lot of the traditional plans or traditional groups, you have really just a few employees that are kind of dictating the coverage that everyone gets. If it's a company that has maybe a couple older folks, they're gonna use preventative. They're likely to have more health issues because of age. So because they have those minimum needs for themselves, that's going to dictate the coverage that everyone else in the office gets. Or maybe you have a couple women in the pool, maybe only 2 people that are interested in pregnancy coverage, but that's going to dictate the coverage for everybody else. So what we try to do is get away from that, where 1 or 2 people dictate everyone's coverage, and not in a bad way, not to be misinterpreted. That's just how traditional plans are structured. So it is what it is. But getting away from that to where now, as Cal said, with a senior or someone that's over 50 plus, they're going to have colonoscopies and things like that, probably more prescription needs. Cater the coverage in that direction. Younger people, and on average, younger people don't go to the doctor. Most of us that are 40 and under, never go to the doctor, especially the guys. So, why would they need, $0 copay to go to the doctor? That's not something they ever use. So, just to kind of put it into a real world example, that's the beauty of the customization.
That's right. So going back to this example that you see here on your screen, a 14-year-old male dependent, why are they being offered maternity coverage? What we would do in a situation like that is we would likely double up on the accidental coverage. We want to address the issues that are pressing for that individual moving forward. Most 14-year-old kids, they're going to be running around playing with their friends, biking, skateboarding. Maybe they're into sports. A lot more activity than, say, someone who's 40 years old, for the example you had earlier. So to us, that's more accident prone. So we want to make sure if they ever have to go to the ER, instead of being charged for maternity coverage, you can use that as a credit and place that towards a lower deductible with lower premiums, which will help that family out if and when the time comes. Again, we want to customize the plan.
Another example with the maternity, so people don't get the wrong idea, with this customization, we can also have maternity incorporated into that. Let's use the example again where you have maybe only a couple employees that need that benefit. Well, in a traditional plan, everyone gets pregnancy, everyone has a $5,000 deductible, maybe higher. The way we can customize, we can give pregnancy just for those that need it and structure it to where there's no deductible. So it's better coverage for everyone. And that's kind of the part of the beauty of this too, is that by doing it this way, everybody gets better coverage, and the costs are typically about 20% less.
Right, I was just about to say the same thing. Yeah, 20 to 30% higher if you want maternity coverage. You're asking for a higher potential claim down the road, so that's where the cost is going to come in. And of course, you don't want all the employees in your company taking on that cost if it's not needed. So now we understand how controlling costs for an individual basis works. Let's take that next step into understanding how the flexibility comes into what the future may bring. So, without the ability to adapt to whatever situation you have at hand, you can be pigeonholed without any options. Kind of circling back around what Dimmick was saying earlier, unfortunately, too many of these traditional plans will be dictated by a couple of employees that need a specific type of coverage. Therefore, everyone else needs to follow the same suit. That doesn't need to be the case. So we may have 2 employees on one plan, 3 other employees on a different plan, because the other 3 employees are different ages and different categories than the first 2 employees. So we want to make sure we mix and match based on your employees' needs. It's the only way to really control costs. For example, you may have a couple of employees that are over 65. Well, a group health plan premium for those over 65 is much more expensive than those on Medicare. So what we can usually do in that part is, depending on the situation, is possibly add on a Medicare Part B, get them a traditional option because they're coming off their plan. It could create a guaranteed issue, which is a smooth transition straight into Medicare. So there are different ways to control costs and apply the coverage to what's needed with that
That's
employee.
another example with Medicare, where again they'd be getting better coverage. You know, that 66-year-old that's on the group plan right now, they still got that big deductible. You know, when they go to Medicare, that goes away. So, you know, that's always ever present in what we're doing, is getting better coverage for everybody. All the flexibility, yeah, that's a huge one too. You know, we talk to new businesses all the time. You know, may have be hiring their first employee, or you know, it's just a little family shop, 2 or 3 people, and people are jumping through hoops to get on these traditional plan or these traditional group plans. You know, hiring the son and the daughter as employees of the company so they can now get coverage for the family because of the requirements. You know, you have to have a certain number of employees and you have to have a certain participation level. Or, you know, we even had one recently where a lady called and they were considering hiring their first employee, but they didn't know if they were there yet or not, and they wanted to get coverage. Well, again, on a traditional plan, they would have to have at least one employee. So, you know, what are they supposed to do in the meantime? So this is where we're kind of, painting the picture of being flexible depending on what the future may bring. You know, we're particularly with the smaller companies. You know, when you're getting started, you don't know what it's going to look like next week, next month, a lot of times. So, you know, why get locked into a plan that's going to, be a burdensome cost and a burdensome issue to get set up?
That's exactly right. Take that a step further. Those that are trying to get on the plan, they just want to take care or try to take advantage of PPO access. Without getting on a group health plan, if you're with healthcare.gov, you know firsthand that there is no PPO. They're all HMO based. Keeping the back of our mind as well. And by the way, the example that Dimmick gave about trying to give a husband and wife employee or make husband and wife employees of a company so they qualify for a group health plan, we can work with all that. Whether or not you pay yourself as a 1099 employee or a W-2, we can still extend these same coverages to you. Just to put that out on a side note there. So kind of put in more perspective of what we're trying to convey with this flexibility. If you take a company of 10 employees that have to downsize due to inactivity, say they were an airline provider and the activity dropped off to a minimal, so instead of running 10 employees, you have to scale it back to 3 employees. Now, if the other 7 that were let go or furloughed, we can scale back our coverage to adapt to what their needs are moving forward. So a lot of traditional plans out there is basically a one giant generic policy. So there is no way to scale back the coverage. It's all as is. There is no way to knock it back. With our coverage, we can scale it back.
Keep paying full price. That's what you hear the stories of people get the offer for their Cobra premium. It's going to cost them, $2,000 for their family of 4.
Right, when all that family of 4 really wants to do is protect their family against COVID-19 and the threat of hospitalization. So this gives us the option to be able to do that. So this way the employer can still offer basic benefits to their employees and have an easy transition with those employees back to the workforce, when when business speeds back up down the road, as opposed to starting from scratch, hiring new employees, going through training and escalating the costs that way. This is something that, or a strategy that we can help employees with, either taking away coverage or, being able to add that coverage back in. I mean, Dimmick and I have seen dozens of examples of this happen to where we have clients every once in a while call us and say, hey, listen, the fourth quarter is always our slowest time of year. So is there any way we can bring it back to a basic plan and then add back the platinum plan at the beginning of the following year, which we can easily do that for them. Now, course, this has to be prompted by the employer. We don't want the employees changing plans every month or so. But this is just an option of flexibility that they have with us that they don't have across the street. So, another thing I want to make sure that's clear, that we're trying to convey, that we can either, take away or add as much coverage as need be moving forward. Sometimes employees will structure a plan where all the regular employees are going to receive a basic plan. The management receives a platinum plan, while the owners and executives, well, they'll end up taking a health insurance 2.0 plan. And each level that moves up, of course, comes with additional coverage. So in situations like this, if one employer were to get promoted from, say, a regular employee to a manager level, we could easily accommodate that plan without having to wait for open enrollment coming around the corner.
Yeah, that's a big one. We don't have those once a year windows to change, right? If that person gets promoted, we can upgrade their plan effective immediately.
This is true. So again, flexibility is the key on what we're trying to the picture we're trying to paint, that we can give you options above and beyond what you have right now, just because it's structured completely different. It's customized from the ground up. So
we can even come in as an option B too, and this is something that we look at companies with. But just come in as an additional option to what you're already offering. So there's a lot of ways that we go about it. A lot of ways we can do that.
Right. To add on to what Dimmick's saying, let's just say we have a company of 20 we come across. If they already have a plan that, say, 7 of their employees love, but there's 13 employees that are not participating, then we can provide a solution for those 13 employees. Maybe it's because the premium's too expensive. Maybe it's because they don't want to take on a large deductible. A lot of these plans will have a max out of pocket exceeding $7,000 a year. And when an employee sees that, it kind of makes them want to shy away. Or maybe they don't want to participate because they can get cheaper coverage across the street. So what Dimmick's talking about is what we have is called a side-by-side plan, where we can show them option B for all the employees that are not participating to try to get that enrollment up. And of course, the more benefits an employee participates with, the more likely that employee is going to be a long-term employee, which works into the employer's favor. So so it's all about providing the right flexibility moving forward. So moving on here, when you're talking about stabilizing long-term renewal rates, this is something that we hear this time of year more than any other time of year. The fourth quarter, guys, is the one quarter that most businesses set their group health plans up with. So most small businesses end up changing their health plan every single year because premiums are jumping so high, which is making this unsustainable. Can't tell you how many times we talk to clients coming on board that are telling us that they've changed their plan 3 out of the 4 last years, and it's become such a burden to look at something else out there. And a lot of them are having to take smaller networks as well.
Yeah, and really, small businesses are kind of disproportionately penalized in this situation because, what happens on the traditional plan, they don't do any underwriting. Everyone that applies for coverage is approved and coverage is issued, which is good. For those people that have pre-existing health issues and things like that. The bad side is that they, when it comes to renewal every year, that's when they underwrite. So now they look at what the claims were over the past year, and if a small business, again, this is where they're really unfairly hit. Let's say you have 5 or 6. Let's say you have 5 employees, and one person has a major event, a big accident or something. Well, when it comes to renewal time, the insurance company is looking, here's some pretty big claims, dollar amounts for this small pool. So now we have to adjust the premiums. And that's kind of where it gets to the point of being unsustainable. And you could even be riding along for 10 years as a small business and just have it happen out of the blue. So, even people that have plans in place for a long time, everyone, unfortunately, that's a smaller business has this exposure, just because it's something you can't control. One person has some health issues in a year, nobody can do anything about that. And then here you go with a renewal, you get tagged with a big premium increase.
It's almost to the point of reading between the lines. So yeah, and a lot of plans won't underwrite up front, but make no mistake about it, a year later, they're going to tap you on the shoulder and say, well, this employee over here was sick from this employee over here had an accident. Well, you're only bringing in X amount of dollars per month in premium, so we're going to go ahead and assess a 15% rate increase to offset that risk. So you may not be underwritten the first year, but you will be underwritten each year, what's called a look back. They're going to look at all the claims that have happened and then assess the rate increase from that point, which leads us into the second bullet here, or to the second point, I should say. You should never be penalized for simply having a low number of employees. So if you take that example what Dimmick was talking about, if you have 10 employees and one employee here or there have a major claim, if that claim amount that they paid out exceeds the dollar amount the other 9 employees have coming in the door, that's where that price increase comes from. Now, instead of having 10 employees, if that company had 500 employees, that claim would evaporate. In other words, wouldn't be a concern because now there's 499 sets of premium coming in the door to offset that risk. So what we want to do is we want to make sure that no company is ever looking up to their competitor. In other words, a company that has only 5 to 10 employees should never be at a disadvantage for a company that has 100 plus employees. After all, you're not going to have that disadvantage for the individual market, so we want to bring that back to the group health market where you can sustain those long-term costs as a small employer without, losing those benefits that are assumed to go away when you're a smaller company. So the approach that we use has a 50-year track record with stabilized premiums, and this is how we're able to do what we do. So again, we want to look at the company from the ground up. There's a few employees that are probably not happy in the plan that they're at right now. We can provide a solution for those few employees and likely provide a better scenario for the other employees that are already on the plan or who are participating with that plan. Again, it's customizing.
Part of what we do is, for those that are listening here, we have a quote engine on our website. So, you can actually go directly to CustomInsured.com. You can quote, an individual, you can quote a family, a couple minutes, but you can also quote a small business on there. It can accommodate up to, I want to say, 99 employees. So, you can check that out. It's real pricing. We have breakdowns of our most popular plans on there. So, take a look and, you can kind of see for yourself, see the numbers.
Right. And once that quote's completed, again, we want to put our best foot forward. We want to show you what our premium is compared to where you're at. And if it warrants a conversation, we'd love to speak with y'all. And at the end of that quote, you'll have the option to either book a webinar or book a phone call so we can answer any questions that you may have. So thanks for listening, guys. Go ahead, Dimmick, any parting words?
Yeah, no, I was going to say, in the meantime, we always appreciate those of you that listen and watch out there. We also have tons of podcasts. If you have any interest in pulling those up, just Custom Insured Podcast. Also pretty extensive YouTube page with different videos on different health insurance topics as well. But that's really kind of the extent of what we wanted to cover on this video. We do appreciate it as always.
Hey, thanks for listening, guys. Happy Thanksgiving coming right around the corner. Please stay tuned. We have several more of these videos coming out to explain how we navigate our group health solutions to the small business market. This is Callan Dimmick saying adios to the next time.
Take care.